Today I'll be showing you an extremely easy option strategy that you can set up to make about $200 in 2 days from now. So with this example, I'll be showing you on Boeing. So we come over here to trade Boeing options. You can copy this trade if you would like to, but it'll be over in about 2 days. So you'd have to get on this pretty quickly, because I am recording this on August 18th and I will probably post this on August 18th as well. So you have about a couple days to put this option in place, but if not, that's perfectly fine. You can set this to August 27th. I'll show you what this looks like on August 27th as well. But for the first example, I will show you on August 20th, which is 2 days from now. So what you're going to do is you're going to go to Boeing or whichever option you choose, and you're going to look at the weekly and monthly and 3 months charts to see where you think Boeing will be at by your expiration date. So Boeing has been dropping a little bit over the course of this past week. Let's see, it starts out $238 and it finishes off at $219, so it's about $20. And so let's say I heard some good news about Boeing today, and I think that Boeing will move rapidly within the next day or two. Let's look at the month first. So it goes up a little bit and then it starts to bend back down. 3 months is just about the opposite. It goes up, down, back up. So let's say, like I said, I heard some good news about Boeing, and I think that Boeing will rally up within the next day or two. So right now Boeing's at 218. So we're going to sell a put. We're actually going to sell two, and I'll show you how to edit that. We're going to sell a put where we think Boeing will be at on August 28th, which is 2 days from now. Let's say I think Boeing will rally up around about $4, because if we look at this chart, let's see. It's pretty realistic for Boeing to move $4 in a day. See, August 16th, there's August 17th. That changes from -$11 to -$17. So it can move $6 in a day, as it just showed right there. So it can easily move up $4 if we heard some good news about it. So right here, I think that Boeing will be around the $222 price point. So we're going to sell a put right here. And you're going to buy two puts. One will be above this mark and one will be below this mark, and they have to be equidistant from each other. Meaning if I were to choose this one, for example, I'll show you, then that is a gap of 2, 1, 2. Then that means that the one I buy below has to be a gap of 2, 1, 2. You see that they have a 1 buffer zone between each other. That would be wrong, because that's a gap of 1 right there, and this is a gap of 2. So if I wanted to do the put I wanted to buy below was this one right here at the 220 point, then the one I bought above would have to be right here. As you can see, it's equidistant from the center one. So for this example, I'll show you on this. You'll see right here it looks a little weird, and that's because we have to go here, click this drop down, click on custom, and go to the one you're selling. Highlight that and switch that to 2, because we're selling 2 of these. So now this is what you should see. And as you can see, our max loss is $38 if Boeing is at $220, which is the one we chose right here, or if Boeing is at $225, which is what we chose right here. And that's the brackets you set. So if you were to set the brackets right here and there, then your max loss is at $217.50, which is what we chose, and $227.50, which is what we chose. So you can see how you set your brackets up, but the wider the brackets are, the bigger the loss. But you see the wider the zone, the green zone is. So let's see right here, 219.07 to 225. So that's about $6, almost $7 of green space. But if we tighten the brackets, you'll see our maximum loss goes down, but so does our green area. So now it's 220.38 to 224.62. So that's a little over $4. So you can take your gamble as to which one you think is better. I definitely like the tighter brackets because I lose way less, even though the green margin is a little bit smaller. But you can see if you somehow get it perfect, which you probably won't, but if you do, you were to get $212, and all it costed you was $38 to put this in place. It says 38 cents, but options control 100 shares, so that'll be 38 cents times 100, which is $38. And you have the probability, or the chance, of making profit between 220.38 and 224.62. So you can set these out, like I said, and then your max profit would be $343 if you're sitting, perfectly. But this really depends on what you think will happen, because if you hear some good news and you're certain that Boeing will go up within the next day or two, then you might want to make your brackets a little wider, because that'll give you a better chance of securing a profit if Boeing lands in there. But if you're wrong, you lose, $150 something as opposed to this 38 right here. And so I'll show you, if you were to set this out, let's say you missed August 20th, you set it out from a week from now. What is it going to look like then? So let's sell put. We'll still say put that there. We'll buy this one here and this one here. Click the drop down. Go to the ones we're selling. Switch that to 2. So you can see it's minus $25 for a $225 profit. So just if you missed the August 20th date, that's perfectly fine. You can totally set this up for August 27th. And this is a great option strategy to do. It's pretty low risk. It is options though, so I would make sure you do all your research as to everything that can go wrong, such as assignment, things like that. But if you are looking for other option strategies, you can check out my channel. I have many other videos showing you different strategies that you can do. And if you have any questions, comment them down below and I'll be sure to answer them all. Subscribe for more videos like this. I upload lots of videos like these, and you can check out my channel to see some other ones. But thank you for watching.